Welcome everyone to Office Hours for TradersPost on this May 24th, 2024, the year of our Lord. I am here as always with CSO Mike Christensen. How's it going?
Going well, Tom. How are you?
It's the sun is shining. It's beautiful out. Bitcoin's down, but I sort of balanced everything out. So I'm pretty good. Looking forward to the weekend.
Yeah, definitely with the better weather. I'm gonna get the motorcycle out and take some rides this weekend.
I've gotten into bees over the last year or two,
Oh,
and I'm
really?
working my way up into getting my own hive, my own urban hive. And so
Okay,
I just love that fresh honey. If there's
that's
anything I love
awesome.
more than crypto, it's honey.
I didn't know that. That's cool. I like it.
Excellent. So this week, we, as always, will be going through your questions. We take your feedback, take your questions, because we want to make sure that TradersPost becomes the best automated trading platform for you and your needs. I mean, want to be. Clearly, we are. That's why you guys are here. You've chosen us, and we want to make sure that the features and understanding of the platform continues to grow for you and us. This week, we've gotten questions as usual from Discord, from YouTube, and from our emails. And so we'll jump right into it. Our first question comes here and states, will my alerts change if I change my strategy settings on TradingView charts? So you have to, this is something that I made the mistake of. When you create your alerts on TradingView creates a copy of your script on the conditions on the server so that it could run on the cloud. And so if you make changes to your indicators or your strategies after, you have to delete the existing alerts and create new ones. Have you ever fallen into that trap, Mike?
I have. There's another way around it too. You don't necessarily have to delete the alert. What you'll notice is that if you open your existing alert, you'll see two versions of your script in the dropdown for the alert source. All right. So the one that's selected is the old version that TradingView copied. And if you go down the list, you'll see your script again, your strategy again. And if you select that one, that's the updated version of it. So what I do is
No
I
way.
rotate
I did not
my
even know
alerts
that.
by selecting the other one.
So even if you're not saying it's shown it twice in the input source because it's twice on the chart, you're saying it recognized that the old one is the cloud version.
That's right.
Hey, that's way easier. Okay,
Yep.
perfect. I'll do that.
Yep.
I've had alerts just linger around and then it triggers. I was like, wait, I wasn't trying to enter that crypto trade. No, it turns out.
My strategy's not even on the chart anymore.
Exactly.
Yeah.
All right. Next question is, what could be reasons for why my strategy performs better on higher time frames than lower ones?
Yeah, this is a really good question. And I think one that kind of touches at the heart of how difficult it is to build a strategy in the first place, one that is consistent and robust and stands up over time. I think there's a couple of things to consider. One is that in an intraday strategy, or let's say a 5 minute strategy that is on a lower time frame, the amount of market noise that exists at those time frames is simply substantially higher than if you were to zoom out and look at the 2 hour chart or 4 hour chart or 1 day chart. Particularly on a daily chart, you've got, just looking at the NQ or ES or the SPY on a daily chart, you're looking at 252 bars right off the bat, which is an entire year of data. So you're going to capture a lot more of that market volatility by looking at a higher time frame. When you're on a lower time frame, it's really easy to get stuck in this trap of building a strategy that kind of works within a short period of time because the volatility during that period that you're testing on is either really small or really high. And then it just doesn't work anymore when that volatility or seasonality of the market or regime of the market suddenly changes. So I think one factor that goes into performance is being able to test on a very, very long period of time. And TradingView in general just doesn't offer a ton of data for you to test on. Even with the deep backtesting tool, it's not always a very reliable way to test over many, many years of data. So I think the one factor to consider is market noise. There's just a lot going on in the middle of a day that can be very random, that can be event driven, it can be liquidity based, it could be that somebody just needed to exit a position really quickly because they are ready to take profits, and really it's kind of a false signal. I have found personally that many of my strategies perform better on the higher time frames because I can capture those market ranges, the average true range of the bars better, because you can see more data over longer periods of time. Um, so that would be my thought around that. I think the other consideration beyond higher time frames versus lower time frames is uh, really kind of dependent on how many alerts and signals that you're taking. Every bet that you make on an entry is a bet that has some probability tied to it, and the farther you are from the higher time frame that you're on, the easier it is to see how those probabilities play out, especially if you're looking at trend. But if you're really close, if you're in at the 5 minute chart, it's really hard to see whether or not you're in the middle of a trend, the start of a trend, a reversal. There could be some larger force of buying activity that's about to occur because you're hitting a supply or demand zone that's on the higher time frame, that's met by more participants in the market. And so that factor, I think, plays a lot into the noise factor, where it's very hard to tell where some of that activity is going to come from.
Yeah, volume provides like this weight to a chart. So even though the chart is fractal and looks the same on all time frames, what it takes, the amount of volume that it takes in order to move a daily candle is different than on the 5 minute. And so I always think of it in terms of who am I playing against, right? So if I'm on the intraday time frame, I'm on the 5 minute time frame. Yeah, I'm playing against other retail traders. I'm playing against algorithmic systems. I'm playing on lower volume. And then when I'm on the daily, weekly, monthly time frame, I'm playing against institutions and commercial entities. And so it's like, okay, have a different way of thinking. So, like for example, on the higher time frame, I'll always trade in the direction of institutions. I see no reason to not do that unless I'm like really looking for a black swan event or something like that. But on the lower time frame, if I know on the higher time frame, there's a bias towards bullishness for the institutions. They're plugging away. Well, when there's a pullback in the price, well then I could play the mean reversion because I know that I have the support, like Mike was saying, that the supply and demand that exists on the higher time frame. There's this like inertia also that happens with the one of the main complaints that I get from, or pushbacks that I get from clients when I suggest that they should run their strategy on the higher time frame because the conditions that they're looking for are lean towards that. So let's say they're a fundamental trader, they're trading on fundamental data. It's like, well, fundamental data is going to affect your higher time frame. Why are you trading the 1 minute on fundamental data? You're not playing in that stream. And the pushback they'll give to me is that, well, when they have to play the higher time frames, they need more risk. They need to allow more of, they might have to allow 2% stop loss as opposed to 50 basis point stop loss on a shorter time frame, and they think they're taking less risk by going on the shorter time frame. But they have to take more trades more often in order to make the same amount of money. And they don't count that because they go, well, I only lost this much, but you lost that much 20 times. Whereas you might have taken one trade on the higher time frame and only risk the 2%. And so I find it difficult sometimes to show people, even traders, that higher time frames can be completely different than intraday.
Yeah, I think that's a good way to look at it. That not only is your performance going to vary on the higher time frames, but maybe another factor to consider is really just the transaction cost. I think this is also kind of ignored by a lot of traders in general. Just the amount that they're paying in commissions with many trades being executed on a single day, maybe more in futures than stocks. If you found a platform that allows you to get free commissions on your stock trades, fine. But the and on options and futures, you're typically paying a commission every single time. And maybe your reasoning or logic behind that is, yeah, but I'm hurdling that commission cost because I'm making enough on each trade to cover that cost. Yes, that's probably true. But ultimately, if you were on the higher time frame, You can pay a lot less in commissions if you entered at a zone on a higher time frame and then exited and held that position a little bit longer. That cuts down on some of that commission costs, which can add up significantly over a given year. If you add up all of your commissions of what you paid to TradeStation or Tradie, or what you've paid in options and in options premiums, it's significant. If you let that cost add up, you realize that's cutting into your profits quite a bit. And in reality, on the lower time frames, if your strategy is built well and it's actually capturing this trend every single day, well, then you could have captured the same trend on the higher time frames. If you're doing a good job, noticing that there's a positive trend in the market, and you're showing up at the beginning of the day and exiting your position at the end of the day, wouldn't it have been better to enter the position early on in the cycle and then exit at the end and only pay the commission one time?
That's right.
At least that's the way I look at it. But
Excellent. We have a question here in the chat from Ezra. Maybe you can help elucidate this. They're asking, does TradeStation offer future ticket for SPX that uses a fixed ticker instead of being forced to change based on contract expectation?
yeah, I think John actually answered in line here, but we'll answer it in the video here. So the question's a good one. To trade the S&P 500 in futures, the ticker that you would use is either ES or MES for the E-minis or the micro E-minis. If you use the symbol ES1 exclamation mark, it's the continuous contract, meaning that every day that you buy it, you're basically buying the first front contract within the contract expirations for futures. If you do ES2 exclamation mark, that is the second contract in front. So every time you send that symbol to us, we're going to buy the one that's in front, and you will never have to change that symbol with your alert over time, because we're always just buying whatever the current front contract is.
Excellent. All right, next up, this is a question that came up internally. I thought it might be fun to talk about it today. How does using TradersPost compare to setting up my own connection to my broker to automate my trades?
I think John would have loved to be on this one. I'm going to let him speak through me. So I think the reality is that setting up your own connection to your broker to automate your trades is a huge hurdle. There's a lot of work involved. If it were very easy, we'd have. John asked if he could join. Can we throw him on the? Yeah, please.
Absolutely.
John, join us so you can answer this question, because this is a good one. I know it's a passion for you.
Yeah, let's get it on. 1 second.
We'll give him a couple minutes. Tom, can we answer another question and we'll come back to this one?
Absolutely. Let's go with, why do some people prefer trading ETFs versus single stocks? This was a question I had from a client a couple of days ago, and I was trying to advise him to go ahead and trade ETFs instead, sector ETFs, because he was trying to play a sector, and the sector would do well and the individual stocks would do badly, because he had it in his mind that if he chose the essentially the penny stock version of that industry, he'd make far more, like getting the junior miner in order to play the gold miners. And I was like, you're taking such risk there. And the complaint he was giving to me was that he's failing. He's losing money all the time. I go, yeah, I know you're losing money all the time, but the industry's doing well. So play the sector ETF. You get you get all the benefit of the exposure. And he's like, okay, but I don't get the same upside move. I say, okay, well then go in crypto. What are you doing trading battery stocks, and you're looking for a 3x on that? That's insane to me.
Yeah. And well, I think that's kind of the whole point about investing in an index in the first place, is that we don't know which ones are going to be the runners and which ones are going to be the losers. The whole point of an index is to distribute or diversify that risk across all the participants in that sector, all the constituents in that sector. So if there's any type of meaningful move in an industry, like, energies, you could use XLE, or the finance industry, you could use XLF, or even just the technology industry, you can use XLK. The exposure you're going to get is to the broad sector of those companies, and that allows you to capture all of the winners while not being completely beat up by all of the losers. So it's really just about risk reduction. You're diversifying into a broader basket of stocks so that you're not taking a hit on one single stock, completely demolishing you. Like if you had gotten in 2 days after Roaring Kitty mentioned GameStop, bad time to get into GameStop, but certainly GameStop gets picked up in one of those sector ETFs, and so you can ride a bit of that wave.
You also get the advantage of, if those ETFs are at all targets for passive investing, you have these flows that end up going into the regular flows that that aren't stopped, right? Those flows, they're not the employees who are allocating to that in their 401ks are not like deciding today to sell it. And so you get to have this long only bias and go, okay, generally speaking, this should go up and to the right as long as those flows are continuing, which is the thing, that's why people trade one of the reasons people trade the main indexes, but there are smaller ETFs, sector ETFs, that have the same sort of dynamics.
Yep, absolutely. Well, we got John on, so let's answer that other question.
Hey,
Yo.
John.
Oh, your mic's gone.
Someone was saying they don't need TradersPost and that we can just go pound sand. They'll set up a system themselves.
I mean, it's definitely true to a certain extent. I mean, if you have the skills, you can stand up your own system. The downside is you have to now maintain the system. So on top of building the strategy, you now have to maintain this other software system. You probably have to manage a server. Some people think that they can just run it on their computer. And, what happens the first time you lose power or you lose internet, and you're stuck in a trade? That's why people run things in the cloud, so that you get reliable power, reliable internet. We definitely have had customers who say TradersPost, they don't need it, they can build it their own, they're a programmer, and they always end up coming back because the cost of TradersPost, Tom raised his hand, the cost of a VPS, a managed VPS, is like, a quarter or half of the cost of the monthly cost of TradersPost. So that's the benefit of using something like TradersPost, is you don't have to worry about the server, the software that executes the trade, and you can only focus on the development of the strategy. And you get the benefit of like the crowdsource effect of like everybody using TradersPost. So all the feedback from the thousands of customers that we have gets reinvested back into TradersPost, and you get to benefit from it. Whereas when you build in isolation, where everything's private, like the only source of new features and ideas is yourself. So you're much more limited in that way.
I think
is there anything else that you can add to that?
Yeah, I was going to say early on, when I had built quantitative modeling or sort of machine learning based trading systems in crypto, I was trading them on multiple exchanges. Part of the approach was doing exchange arbitrage, looking between prices between multiple exchanges. The headache involved of setting up the APIs to execute orders with 3 different exchanges was enough for me to wish that TradersPost existed at the time. It's a lot of work. Maybe another benefit that comes with being able to use something like TradersPost is this idea that as the APIs change, TradersPost is picking up that work and maintaining the connection with each of those brokers and exchanges. So when improvements are made or new order types are available, you don't have to go back in and tool with that, and you can spend more time on the strategy and less time on the broker API maintenance.
Yeah. I mean, Mike and I have both been software engineers for over 20 years. And just for like context, like it took us over 2 years to integrate with interactive brokers. Now that's on the like extreme side, because the interactive brokers API is like very non-standard. But there are brokers that have much better APIs that are much, much easier to integrate with, but there's still a huge learning curve. Like you have to have the prerequisite skills to do it. And, there are people out there that have those skills, and, all the more power to those people if they want to take on that responsibility. But that's the minority for sure. And the majority of people, and I even think the minority of people, eventually they're like, I just don't want to deal with this, and they'd rather just buy something off the shelf and not have to worry about that. And then all their energy can go into the technical side of the trading and not having to worry about the infrastructure.
Yep.
I
Of
made
course.
the mistake. Sorry, go ahead.
Go ahead, Tom.
I made the mistake of Interactive Brokers was my first attempt at building a bridge between TradingView and a broker. So a client paid me to do that, and then we had to. So I was like, "What is this headache? Why is it so difficult to get this connection?" I would have imagined they would want to provide the documentation necessary and the tools necessary in order to do it. Okay, no, you got to go and bang your head against the wall in order to figure that out. Then the client needed to get a virtual private server, but I have to teach them now how to access it and run it, and they have to pay for that as a separate subscription. And they're like, "Well, can I pay you and you'll be the one to take care of this?" I was like, "Well, okay, so sure, fine, you can do that," but they still needed to be able to handle that. Then every time they needed to make any they had questions about why isn't this working, or can we add this feature, what have you, they had to pay me anyway. So then I was like, you're really actually not saving anything at all, and I do not want to be doing this. You have to pay me now 3 times more than what I would normally tell you, because I don't want to be dealing with this headache. And then that's why I did the search for, and then get a bridge like TradersPost. I was blown away that that uh, after the client tried TradersPost, then they got it up their head. Okay, maybe Interactive Brokers was a problem. Let's do TradeStation, and we went through the whole exercise again with TradeStation, and then they still then came back to TradersPost after. So they left twice.
But you actually will end up paying 10x the price for a solution that's a tenth as good.
That's right. Exactly.
Yep. I think it's interesting to think about how services like this ultimately save you a ton of time and energy. Thinking back again to some of the quant days that I spent, one of the things that I hated doing as well was just managing all of the historical data, price data, bar data off of, from all the exchanges. So, not to like put all the shilling on TradersPost. Of course, we'll do that all day long. But looking at other platforms like Quantopian or Quant Connect, where I can do back testing and I can actually test on multiple venues, multiple asset classes, that time savings is worth the subscription alone, just because I don't want to have to go and deal with downloading all the data, getting it all in my local environment, making sure it's up to speed, cleaning and parsing that data. So, as you consider any kind of vendor for this whole process in the journey, it's a question of how much time do you really want to spend on all this maintenance stuff that's already been solved for you somewhere else?
And the last thing I would ever want to do is use a bridge like TradersPost, and it's either $5 or free. I would be like, I'm definitely not using that. Are you out of your mind?
Yeah,
crazy.
the price should connect to the quality you're going to get. That's for sure.
Excellent. John, do you mind staying around for the AI conversation, or you got to go?
Sure, yeah, I can hang around.
Okay, so let me pose this to you, Mike, because somebody asked me this week, and it was very funny. They came to me and they said, "Tom, I want to use AI in order to in order to trade automatically." I had to wrap my head around what they even mean by that. Okay. And so what it came down to is that basically the pitch I made to them is that what I can do is to help you with machine learning in order to generate a profitable strategy, to examine strategies. And then you can use sort of like a AI oracle in order to help manage whether a trade, like whether the trade signal should be then passed through and actually accepted. Like if you're going to be using any sort of external data in order to weigh the probability of the success of the trade. But it made me wonder, like, either for you yourself or for what you've seen, if you're seeing people using AI, whatever way you want to break that down, in order to develop and execute automated trading strategies.
Yeah, I think there's a number of ways to use ChatGPT or any of, whatever your favorite LLM is right now. Obviously, most people are using ChatGPT to do a number of things. I would use it for idea generation to sort of clarify a thesis you have about the market, because it's well trained on a wide ranging sources of academic research on, how technical analysis works, how fundamental analysis works, how the math behind this stuff works. And I have found that it's given some very, very good answers to questions around just developing a good thesis for entries and exits. And then, of course, you can take that a step further and say, okay, well, now I want to create some rules for how my trading strategy is going to work. Now I would like you to give me the code that I'm going to need for this in PineScript. This is where it gets a little bit tougher. But if you're ready to run through this cycle of testing the code, asking for changes, and then going and saving it and debugging the code, and then giving ChatGPT the errors that you receive or the issues that you're experiencing and having it refine it, you could probably get something out of it without having to know too much code yourself. I believe this process that AI is giving us, or the tool that AI is giving us, is the ability for people to kind of really unleash their creativity without having to know the deeper underlying processes of actually writing code. I don't know that we're at a point now where you can just go to ChatGPT and say, I've got this idea, just write it all for me, and it has it all figured out. It still requires a lot of input and refining. But I have definitely used ChatGPT to stand up basic strategies and explore thesis. And it has helped tremendously. Even as a seasoned veteran programmer, it's been very, very helpful. I'm sure, John, you agree here that we use Copilot even in our local environments. We don't actually want to do a whole lot of coding. I'd rather ChatGPT or Copilot do most of the work for me, especially when writing unit tests. Like, that's so boring. Nobody likes writing unit tests. But the environment we're in now is where it can get you about 80% of the way there, and you need the ability to understand whether what it's given you is correct or not.
I always like the analogy of like AI is like an employee, and like even in a company where you have employees, it's not like you just let them do whatever they want. I mean, you try to give them freedom to explore, but like you still have a process for reviewing their work, providing feedback. Like you have to initially give them the prompt to tell them what you want, and then they deliver you something, and maybe it's slightly off, and you give them feedback, and then they give you another revision. And that's kind of like the same process with ChatGPT or any AI. Is like you're giving it that initial prompt, it's giving you something that maybe doesn't work right away, but then you can test it, you can see the errors, give it the feedback, and you just wash, rinse, and repeat that process. And I think the expectation that people have that you're like not going to have to do any work is the wrong expectation. Like you're going to have to do some work. Someone has to be the pilot. I always like that analogy too, is like airplanes have autopilot, but like you still have someone in the cockpit who's like monitoring everything. And then whenever abnormal conditions come around, like the pilot is there to give input to tell the machine what it needs to do
and handle weird fringe scenarios, because that's always going to come up too, where it just does something weird in a moment that you're like, wait, why did you do that? And so having this ability to go back and forth with AI and give it the context for what went wrong, I think that's the key. The talent in using AI is really more about prompt engineering. It's making sure that what you're saying conveys all of the nuance and context necessary for it to give you the correct answer eventually.
I've been seeing a lot more requests coming in from potential clients who are they use AI to articulate the idea, which I find to be so good. I mean, it used to be that not just this, but another programming I've done. Sometimes I'm getting a napkin with a doodle on it. Whereas now that they're able to have this conversation, this feedback with AI, then they can ask the system, hey, is there anything I've missed that I might want to put in here or talk about or ask, so that they could put together a comprehensive document in order to send to me and go, hey, this is what I'm looking for. This is what I want. And then when they're even asking the systems, okay, what would I then need in order to actually complete this whole process from idea generation to execution? And not uncommon for the AI to then suggest something like TradersPost to be like, yeah, you're going to need a third-party bridge in order to get through. And so sometimes, as far as I think, Mike, you're doing this, I'm doing this all the time. I'll have this running conversation with the AI just to get my thoughts out, just to articulate the idea, and to have it, feed back to me like a rubber ducky, just somebody there who's who's giving me feedback. And then through that whole process, what's great about it is that at the end of that discussion, well, all the text is there, and I can say, okay, reformat all of that information into a markdown document in order to send to a coder. Reformat that into a series of tweets that I could post online. Reformat that into an email I could send to somebody, which is the way I wish more people would think about using AI, as opposed to it needs to do the code. I'm going to paste that into TradingView, and now I'm going to print money. No, that's not the way to go about it.
Hey, I got a question related to AI. I always love thinking about this. It's like Instagram, I think, was like one of the first companies to reach like the $1 billion status. And I think they had like 15 employees or something like that. And I've wondered that with the advent of the cloud and AI in the next, say, 10 years, do you think that we'll have a $1 billion company with only one employee?
They're already doing. So I follow these one-person $1 million companies all the time, because you have the whole micro SaaS and solopreneur movement that's happening, where they just connect all these no-code, low-code tools together. They have a proper use case, and now they're making millions. Mr. Beast, but he made it to what is it, $1 billion with hacking the algorithm for YouTube. And so it's just about, there's no limit to what we can actually scale to. And so somebody's going to be able to figure that out. What I want, do you guys remember the $1 Million Pixel website from like the 2000s or something like that? It haunts my dreams, because that's not.
It was a brilliant idea.
Yeah, to me that's worse than missing Bitcoin. Like, I could have absolutely done that in an afternoon, and I didn't even think to do it. What I love is when people come up, just the short pitch of it. Somebody created a website called $1 Million Pixel. You can go and for $1 buy a pixel and place your ad on there. And you think to yourself, who's going to want that? Well, it turns out that the novelty of the idea was so interesting, it got some media attention, and all of a sudden a person made $1 million to pay for their college tuition. You can bet your bottom dollar that your boy Tom tried to then immediately make $1 million pixel website that did not succeed. Sorry to spoil the story there. But what I love is when people are using simple ideas, the simplest idea, the simple meme nugget of an idea, and then scaling that out to as many people as possible, like how Hot or Not used to do, right? Is this person attractive, not attractive, attractive, not attractive, and it beat out like Match.com for dating. And so, do you guys think have you seen, or do you think you might be tempted to try to take a small kernel of an idea in the retail trading space and then scale that out to, $1 billion company?
That's what we're trying to do with trading, right?
I think we had this idea called TradersPost. Yeah.
No, I mean a successful idea.
I think a lot of times, like, people, like, in some ways, like, the dumber you are and the more naive you are, like, you have the ability to like try things that other people would be like, oh, that's never going to work, and like, I see it a lot where like people who are really, really smart, like, think of all the reasons why you shouldn't do something, when someone who doesn't know any better is just like, why wouldn't this work? And then they try it. And, I mean, finance is a really tough business to break into. And I mean, it's really challenging. I think a lot of people would be afraid or just scared by everything that you're going to have to overcome to do it. But, the trick is just starting. And then, it's like the saying, there's only one way to eat an elephant, one bite at a time. And like, you just got to show up and do one thing, and then show up the next day and do another thing. And it just via that process, day after day, over 3 years, one day you wake up and you have $1 million company.
See, that's the thing. I was sort of like, TradersPost is not the dumb person's idea. It takes a lot of work, and guys are constantly at it. Whereas I'll see something like somebody who has a system that literally just aggregates tweets into a newsletter, and then they're making bank, and they might not even know what the thing is even talking about, because people are like, oh, well, I want to know what the new crypto token is, and so I'll subscribe to this thing, and they never unsubscribe. So like, sometimes those are the types of ideas. I wonder.
Sometimes I wish, and I ask myself, well, I would have liked to have started something like that. But then on the flip side, I'd be like, well, I guess I'm a glutton for pain, because like the things that are easy, I get bored with quick. But the things that are hard that cause me a lot of stress and pain, like I keep like walking into those things over and over. But I guess that's just my personality.
So I love this topic. It's sort of answers at the heart of why entrepreneurs even try to solve the problems they do in the first place. Why would anybody want to go start a complex, piece of software that is nuanced and only a small percentage of the world wants to use? You want to work on the thing you want to work on, and you'd like to be paid for your efforts, obviously, and provide value for customers. But um, the choice as to whether or not you do something that's like dead simple and works versus building something harder is really a question of luck versus something more sustainable, right? Like it's a lot easier to predict whether or not you'll have a successful company if you're selling something that's in demand and people actually want. Then it's just a question of marketing and getting it out there and making sure that you deliver that valuable service over and over again. But knowing if you're the next one pixel site millionaire, that's a really hard thing to determine. Like you mentioned, you tried it and it didn't work. And so having those one hit wonders are pretty tough.
That's why I like the micro SaaS movement, because there are people who are putting together 12 websites, services, and then they know most of them are going to fail, but then some of them make enough to cover 1 year's pay. And I go, I really like that when I see that compared to people who are on like and I rag on the anti-work Reddit all the time, because I go, the time it took you to write this half an hour post, you could have tried an idea or worked with someone on an idea, and I can't believe you're wasting your time. And so to me, like you said, the creativity that opened up with AI space, it's just like it's so juicy. Plus do you imagine that well, no, that's the internal things. I always wonder how much AI will be integrated into TradersPost, but that's can be giving away the sauce. Can be giving away the sauce.
Something down the line, not at the moment, but on this particular subject, though, to sort of circle back to this idea of how you can use AI in your strategies. One last point I think I'd like to make that I think is really important and maybe overlooked in using AI in general. Sam Altman himself has said this in interviews on the subject of how AI hallucinates. The reality is that one of the best things to use AI for is through the reasoning process. There's a lot of things that we do in terms of like how we'd like a strategy to work, or some view we have on the market and the thesis that we have, where we haven't fully thought of all of the gotchas, the catches that we'll need to consider. So letting AI help you reason through things is, I think, a very, very advantageous way to use the tool. Think of it from a high level, like, what am I not considering here? Ask it questions like, what are the errors in my approach here that I haven't considered? And it will work through that reasoning with you. And I think that's a fantastic use of the tool.
Excellent. So we'll end here with there's a question here from a Ventura trader. No, John was asking here, or was answering, but I'll just reiterate it. Someone was asking, since you can't hold trades over from 5 p.m. to 6 p.m., is it possible to code in PineScript to close open trades at 4:59 p.m. and then reopen them back up at 6:01 p.m.? So it is possible in PineScript to set trades or signals based on time. There's actually multiple ways of going about it. So the only thing I would say is that you want to make sure that that you test how you're doing that, because there are ways that out of the box seems like it should make sense, but it could be that, for example, once the signal gets sent, it might not be enough time for the signal to get from TradingView to the broker and get executed reliably, right? You might have to do something sooner. You might not want to rely on the time variable within PineScript in order to do it. You might want to, let's say, look at the number of intraday bars that have passed, because let's say on a 1 hour time frame, you can pull all the candles for the 1 minute. So you can say, okay, when this many candles are there, let's go ahead and fire it. There's different ways you can go about that, but yes, it is possible to do. All right, folks. Any day where John joins is a great day. So thank you very much, John, for participating. And we'll call it a close for today's office hours. Just want to remind everyone that if you have any questions, we are always happy to answer them, either on the stream or in support tickets or in Discord or what have you. So please don't hesitate to do that. We want to make sure that TradersPost is the best platform for you. And to do that, we need your help. So I'll wish everyone a great weekend and hope you get to enjoy the sun.
Happy Friday. Cheers, everyone.